This is CGTN, China Global Television Network.
Hello there, welcome to this edition of Global Business Africa. In the next 60 minutes, we'll run through the business news stories you need to know about from Africa rather, and beyond. Here's what's coming up in the market. The country's internal conflict, Ethiopia's internal conflict notwithstanding, the country will proceed with its telecom sector privatization plan by putting out a request for proposals this week, Friday. That's the 27th of November. Nigeria's main index just about 0.7% higher today, mostly holding on to the gains from that late October rally. Tesla over 500% rise so far this year. It's showing no signs of losing steam ahead of its inclusion in the S&P 500 next month. It was over 4% higher just after 15:30 GMT, $544 at that point. At that price, Tesla has a market cap of well over $515 billion. If you're interested in playing around with comparable numbers, that's roughly double Egypt's GDP in 2018. Here's what's coming up tonight. We'll cover the cost and logistics of distributing the COVID-19 vaccine or vaccines around the world. Concerns continue to rise about South Africa's state of public health after several downgrades. And China's foreign minister arrives in Japan a week after signing a trade deal. Our starting point tonight is in the world of medicine. The medical charity Médecins Sans Frontières, or MSF, has welcomed the British company AstraZeneca's commitment to sell the COVID-19 vaccine candidate it's been working on this year at a no-profit price during the pandemic. AstraZeneca, however, it says, must prove its claim that its potential vaccine has the lowest price of the main candidates on the market so far. MSF urged the vaccine maker to substantiate that promise by providing supporting data and making public its supply contracts as well. AstraZeneca has said it will not profit from the sales of this vaccine, the price of which has been set at about $3 a dose. Compare that to other candidates, which cost about 4 times as much. The British firm says that its COVID-19 vaccine is 70% effective in pivotal trials, and it could be up to 90% effective depending on how the dosing is staged. That essentially gives the world a third new weapon that can be cheaper to make, easier to distribute, and much faster to scale up compared to rivals from Pfizer and Moderna. In the meantime, the World Health Organization is reporting of tremendous progress in the research and development of finding a vaccine that deals with SARS-CoV-2. WHO Director General Tedros Adhanom Ghebreyesus says trials are providing a fair bit of hope in ending this pandemic.
With the latest positive news from vaccine trials, the light at the end of this long, dark tunnel is growing brighter. There is now real hope that vaccines, in combination with other tried and tested public health measures, will help to end the pandemic.
It's possible that we will have a number of different vaccine candidates that can be used in the fight against this disease, because we would like to provide access to as many efficacious and safe vaccines as possible so we can cover the population around the world. Remember, we have to cover a huge number of people, billions and billions of people. This is unprecedented, and we will need all the manufacturing capacity in the world to be able to do that.
So let's dig a little deep into the logistics involved in actually getting this vaccine to market. Dr. Fiona Atuhebwe is the Africa Region New Vaccines Introduction Officer at the WHO. She joins us with more on these developments from Brazzaville. Thank you for your time this evening. Walk us through the structure of COVAX and how it works.
Thank you very much. So the COVAX facility is a global collaboration co-led by Gavi, the Vaccine Alliance, the CEPI, the Coalition for Epidemic Preparedness Innovations, and the World Health Organization. And this coalition is working in partnership with both developed and developing countries and also vaccine manufacturers. Really, the COVAX facility aims to accelerate the development and manufacture of the COVID-19 vaccines and to guarantee the fair and equitable access for every country in the world. The bottom line, the bottom principle of the COVAX facility really is pooled demand and pooled supply. which improves the negotiating power of countries. And also it provides manufacturers with this massive demand and assured market. When countries apply to join the COVAX facility, then we assure the manufacturer that once they have invested, because they are going for at-risk investments, committing a lot of funds to invest, knowing that then there's demand down the road once the vaccine is out. The other thing about the COVAX facility is that it has a huge portfolio of vaccines, candidate vaccines that sits in the COVAX. And we know that countries are able to make bilateral deals, but with the benefit of the COVAX facility is that when countries go for bilateral deals with a manufacturer, that's a demand by one country and one manufacturer and one vaccine. So the country risks delays if the vaccine doesn't go through. But with the COVAX facility, there's a huge portfolio. We have a basket of about 10 to 15 vaccine candidates that sits within the portfolio. And a country would stand a better chance of having the available vaccine at the earliest opportunity. And like I mentioned, our aim is equitable supply and to make sure that all countries receive this vaccine at the same time.
Can you give us any more details on which companies are working on those 10 candidate vaccines? Does it include the ones that we've been discussing for most of the last week, the candidates from Moderna, from Pfizer, and the AstraZeneca and Oxford candidate as well?
So for now, it's the AstraZeneca candidate that is in the COVAX facility, but discussions are already ongoing with the Pfizer and Moderna to ensure that, to see if they can get this into the COVAX facility. But for all the COVAX facility is also open to all candidates available, because most important is to ensure that populations are protected, at least from the acute phase of the pandemic, through the use of the vaccine.
Right. So once, for argument's sake, let's assume that these candidate vaccines go through phase 3 trials, they get approval from regulators. Once we get into the question of full-scale production, how then do we decide how to allocate the available doses and in what order? Because obviously within different countries and different populations, there are those who are essentially at higher risk than others, like medical professionals, for instance.
So the principle of dose allocation is really getting the vaccine to both the developed and non-developing, both the self-financing countries and what we're calling the advanced market countries that will receive doses which will be financially subsidized by the COVAX facility. So our aim is to get the vaccines to these countries really at the same time, or as quick as possible at the same time. So far we have 186 participants in the COVAX facility. These are countries that have subscribed, which represents over 85% of the world's population. So most countries are in this COVAX facility. The prioritization on who gets the vaccine will be done at country level. But at the COVAX facility level, we are aiming to get at least 20% of populations of every country covered by the vaccine once the different vaccines are out. That is the minimum we are looking at. But even if we don't get to that level, whatever is available, we are working towards equitable supply.
Right. So given the unprecedented nature of this pandemic, should companies be required to fully disclose all of their pricing policies, as MSF has argued, so that clients are aware down the line, saying this time next year, if there's a price hike that may come in the future once we're past this particular pandemic?
So it's not a prerequisite for manufacturers to give their prices up front and make them public, but we have seen estimated costs of different vaccines that have been made public by the manufacturers. They are just estimates. We do not know what the vaccines will actually cost, but the biggest thing that the COVAX facility is working on is to ensure that we have affordable vaccines, that the vaccines are made as affordable as possible. But as I also mentioned before, the manufacturers have really invested heavily into the manufacture and research into these vaccines. So that return on investment needs to be kept at the back of our minds, that the manufacturers need to get out what they put in. But the pricing, the COVAX facility is working really, one of the jobs is to ensure that we negotiate affordable prices.
Right. One last question for you, Doctor. Assuming that there's no equitable distribution of vaccines to deal with COVID-19, because vaccine nationalism has been a huge threat pretty much for the last half of this year, How does that change the forecasts, A, for the spread of the disease, but also the number of deaths it may cause across the developing world?
The issue of inequitable distribution of vaccines is not something that we can even begin to think about, because all that can be put in place for equitable distribution has been put in place. And why? It's the fact that for assuming that Africa is left behind because our epidemiology is different from the epidemiology in Europe or US, if this virus remains in Africa and mutates, then the rest of the world gets back to zero. So it is in everybody's best interest to make sure that we reduce this virus to the lowest level possible as we can, and in all regions, in every place, and ensure that we do not see this acute phase that has affected us as it has affected us. Otherwise, inequitable distribution is not something that we can even talk about. It's not going to happen.
Indeed, we'll see how this plays out. Dr. Fiona Atuhebwe, thank you very much. Now, you heard us speaking there about the vaccine candidate that has been developed by AstraZeneca and Oxford University. Here's CGTN's Andrew Wilson with the latest on that particular vaccine candidate.
The results are in, and the Oxford vaccine has lived up to all expectations. The best data came from a regime of half dose followed by full dose, showing 90% efficacy across the age groups, and with accompanying signs that it could limit both disease and transmission.
The higher efficacy regime is better tolerated, and also there's a hint that it may have an impact on asymptomatic infection and therefore possibly transmission of the virus.
All good enough for the Prime Minister, who quickly tweeted the incredibly exciting news that the Oxford vaccine has proved so effective in trials. There are still further safety checks ahead, but these are fantastic results. So, subject to regulatory approval, a programme is now set to start.
Of course, there is a process from now on. It has to be all reviewed. The numbers have to be looked at by the people who are involved in regulation. And then in the UK, I think the next step will probably be something like an emergency use authorization.
Subject to that approval, we hope to be able to start vaccinating next month. The bulk of the vaccine rollout program will be in January, February, March. And we hope that sometime after Easter, things will be able to start to get back to normal.
Logistically, not a simple task, but the Oxford vaccine is the easiest product so far to transport and produce. And AstraZeneca already has 20 production deals worldwide, including in Russia, Japan, the US and Thailand.
Today, just one of those manufacturers has 100 million doses ready to be used, and that number will grow over the coming months. And the target over the next year is 3 billion doses to be provided for the world.
Here, the NHS will be gearing up to tackle a prioritised immunisation effort, and the World Health Organization will be coordinating international distribution.
The next challenge is going to be to get enough people immunised fast enough to have an impact on the virus. And that does take time. I mean, it simply takes time to manufacture, to get the vaccines distributed, and then to get them into people's arms. It can't just be done overnight.
Even together, the three companies to complete phase 3, AstraZeneca, Moderna and Pfizer, do not have enough capacity to immunise the world's population. More success stories will be needed to follow this one. Andrew Wilson, CGTN, Oxford.
All right, then. So we've discussed the allocation of these vaccine candidates, assuming they do eventually come to the market at scale. But remember, when you have a public health emergency of a global nature like this, who gets to own and who gets to profit from the proceeds of the research that's been put in, the money and the time and the effort used to develop these vaccines? Let's explore that in a bit of detail with Liz Lenjo. She's an advocate of the High Court here in Kenya, specialising in intellectual property law. Liz, this is going to be a bit like Law Class 101. So let's start with the basics. What sort of IP protections do apply in the world of vaccines, and does that change when you're talking about a public health emergency?
Okay. So when we're talking about intellectual property and protection in the pharmaceuticals and medicine sector, they're still entitled to general IP protection. So we're talking about patents, where these medicines and devices are entitled to patent protection. Remember, patents We're talking about novelty and newness and industrial applicability. So the threshold is much higher. And the protection is up to 20 years exclusively to the patent holder. And then we're talking, in terms of also industrial designs, perhaps maybe some of the devices that in which the patent holder may be using to administer the medicine may also, gain that protection. They would want also to stand out in the market, right? So, there could be aspects of industrial designs as well for any devices attached to the medicine or just a medical device. And then, of course, trademarks, how you brand the name of the medicine or the vaccine as well, they would get that kind of protection.
Right. So we've dealt with public health emergencies before. HIV, for instance, cancer do come to mind. And Indian case law has a long history of taking the view that you can't provide patent protection and grant it in a country where average incomes, are pretty low, and market pricing would essentially deny access to healthcare for the vast majority of the population. Essentially, they're making the case here that the greater good needs to be balanced off against giving a return to investment and, of course, compensating investors for taking risk in developing that particular drug. So given the sheer scale of this pandemic, does that set a precedent that then several other African states which share Commonwealth law can then follow?
Okay, I think it's always important to highlight that we have some legislative developments on the international and local scale. In 1995, when the TRIPS agreement was passed, which is the trade-related aspects agreement on intellectual property rights, or rather trade-related aspects of IP agreement. They introduced the TRIPS flexibilities. Here we're talking about compulsory licensing when it comes to issues of access to medicine. Now this provision is catered for, is protected or provided for in issues or instances where we have such issues of medical emergencies. So in instance, we're talking about COVID-19 and the issue around the potential access to a vaccine. So, when a patent holder fails to grant a license to a third party requesting for this particular access to the patent, then they can plead for compulsory licensing through the government. So, all governments or other member states that are parties to the TRIPS have this provision in their law. So, for example, in Kenya, we have it in our Industrial Property Act under Section 80, which provides that where a patent holder fails to grant patent, that is going to save a life, for example, then the government would grant such. But what this basically means is that the patent holder is not excluded from earning from his, from his patent. It just means that in this instance, they might not make as much as they would want. So, this is one of those flexibilities that also is a call to action for the pharmaceutical and medical medical inventors, that at the end of the day, they should, be also proactive and think about, just this whole market disparities and figure out, differential pricing, basically, in terms of access to the different countries, low-income countries, high-income countries. And then that way they are in control. So failure to control, then, we'll be looking at compulsory licensing, and in this instance, they will be compelled by a government to give access to the patents.
Right. One last question for you. Given, obviously, the scale of this crisis, funding from vaccine development has come from all sorts of places. Perhaps one of the more interesting ones was, I think, a 1 million donation from Dolly Parton, the country music artist, to Moderna's work on its vaccine candidate. So given this massive mosaic of different sources of funding, do any of those funders get a slice of the IP rights and any net earnings from the end product? Or is it that given this is a public health emergency, sorry, you guys are just going to have to deal with taking a very tiny slice of earnings somewhere out in the future?
Well, Ramah, at the end of the day, this is a contractual agreement between the two parties, between the investor and those seeking the investments. So it will vary at the end of the day. There is nothing that legislates what an investor would seek in such an instance. But I think it's always great to understand that there will be the philanthropists who just are keen on social impact investments. They're looking at the impact more than the investment. And then there'll be the investors who are, mainstream investors and always looking at profit. So at the end of the day, it will vary, and the kind of contractual agreements that they would have between themselves and those they are funding or investing into.
All right, we'll leave it there for the time being. Liz Lenjo, thank you very much. Now, on to North Africa. Egypt and China have signed a protocol to build industrial projects in the Gulf of Suez economic area. The Egyptian-Chinese joint venture company for investments will be the industrial developer of that particular land. It covers about 600,000 square meters in the northwestern Gulf of Suez. The company will also concentrate on attracting SMEs into that particular zone. Here's CGTN's Yasser Hakim explaining how this will all work.
The newly formed developer, which is a partnership between several Egyptian and Chinese economic entities, will be in charge of building an industrial zone on land owned by the Gulf of Suez Authority in Ain al-Sukhna. Infrastructure is also provided by the authority, while marketing and attracting investors is the responsibility of the Egyptian-Chinese joint venture investment company.
We expect in the short term to attract investments in the range of $4 billion. The industrial zone is located in a strategic area, making use of all the capabilities such as sea and port access. The Gulf of Suez Authority offers exceptional facilities such as the one-stop shop, where the investor can finish all procedures and licenses quickly and easily in one place. There's also a special law applied only here at the Suez Canal. It provides special financial and non-financial incentives to investors in the zone, as well as free tariffs for industries set up in this area.
The Egyptian-Chinese company is focusing on attracting small and medium-sized enterprises. Official figures show Chinese investments in Egypt are over $7 billion in various sectors, including building Egypt's first high-speed electric train and the highest tower in Africa at the new administrative capital. There's also TIDA's Chinese industrial city in Suez Canal Zone, which hosts tens of Chinese factories, including one of the largest fiber optics producers in the world.
Egypt's geographical location is the main source of attraction to investors. Secondly, the major projects underway in Egypt and the personal support President Abdel Fattah el-Sisi gives to investors encourages foreign investors to turn to the Egyptian market as a promising destination.
The latest deal with the Egyptian-Chinese company is another step in promoting cooperation on the Belt and Road Initiative. Chinese President Xi Jinping had previously announced that he targets Chinese investments to grow to $15 billion from the current $7 billion in the North African nation. Yasser Hakim for CGTN, Cairo.
A quick run through some company news. Let's start in the world of telecommunications. The French global mobile network operator, Orange, is keen to expand its activities in Egypt to tap into promising investment opportunities offered by that country's ICT sector. The Egyptian president says the country is keen to expand ties with other French firms given the strategic ties between the two countries and the outstanding French expertise in some fields. Elsewhere, South Africa's chemicals and energy group Sasol has agreed to sell its 50% stake in the US-based polyethylene business Gemini for $404 million. That's the latest disposal as the group seeks to cut debt and avoid tapping shareholders to raise extra funds. Sasol intends to sell the stake to existing partner Ineos Olefins and Polymers, which operates the toll manufacturing facility in Texas, with the party setting a target date for concluding the transaction as the end of December. Western Union has closed its Cuba operation in the wake of new US sanctions that effectively prevent it from working with Havana's military financial firm, Fincimex. Now, this will affect the transfer of all money from abroad, as well as the US money transfer company's 407 agencies in Cuba. It comes in the wake of new US sanctions targeting the involvement of the Cuban military in remittances. It's money sent from abroad to relatives back home, and it's a valuable daily support line for many a Cuban household. And finally, Europe's aviation safety regulator is set to take a major step forward in improving the return of Boeing's 737 MAX to commercial operations. That kicks off effectively the process of bringing the grounded jet back into service. Bloomberg is reporting that the EU Aviation Sector Agency is expected to publish a proposed airworthiness directive, and that will trigger a 28-day public consultation, putting the MAX on track for final clearance, hopefully by early 2021. EU approval would mark quite the milestone in Boeing's efforts to return the MAX to service outside the United States. That's a run through your company headlines. You're watching Global Business Africa. Time for a short break. Here's what's coming up next. As South Africa continues to face credit downgrades, what lies ahead for its fiscal health? And manufacturing in Nigeria expanded for the first time in 7 months, despite the country getting into recession. The details coming up shortly.
The world economy as we know it is about to change. Global business reports highlight emerging markets, developing countries, and dynamic sectors worldwide. We feature top analysts and newsmakers to provide perspectives on every facet of business. From an on-the-ground perspective, we provide you with balanced and objective assessments. Fast, sharp, and insightful. Global Business, only on CGTN.
Every story starts out like this.
Okay, we'll head up now.
But beyond the rush of the numbers, there's always a more fundamental question. What happened? Who has been affected? When market-moving decisions are made, who's responsible and why?
Let's get some reaction on ground. Joining us in Johannesburg is Sutra. Hello, Nairobi.
This is how all stories begin. See how they end. Only on Global Business.
Welcome back to the program. Fitch and Moody's have both downgraded South Africa's long-term foreign and local currency debt ratings, and they're both maintaining a negative outlook on Africa's most industrialized economy. S&P, on the other hand, did affirm South Africa's long-term foreign and local currency debt ratings at BB- and BB respectively. The agency did maintain a stable outlook. Here's CGTN's Angela Coppola with more data.
The two downgrades came as a bit of a surprise to several analysts, but the main opposition political party wasn't shocked.
I think the downgrade decision was a clear vote of no confidence in the government's reform agenda and the progress thereof. It was basically a clear message from the rating agencies that they do not see enough political will or credibility in the reform agenda, and that the pace of reform is not fast enough to make any substantial difference to growth.
If you take the period from March when a hard lockdown was announced and the urgency of structural adjustment was underlined, from then to now we essentially have nothing to show for that urgent structural adjustment program and package.
One of the key concerns for the ratings agencies is the reform of state-owned companies and government bailouts. And then there's the level of national debt.
We've had a delay, an indefinite delay from Eskom on the separation of the business. National debt is another one that is front and center in every one of the updates from the rating agencies. And yet most recently we've had a reversal in the commitment to get debt under control by 2023. That has now been pushed out to 2026.
The government is currently in a dispute with the public sector unions about the final increase in the 3-year agreement. But the DA suggests there's another solution to cutting the public sector wage bill.
And we have shown in detail how you could achieve all of the cuts that you need, roughly 180 billion rand, simply by focusing on those salaried managers earning more than 1.5 million rand, of which there are 39,000, by the way.
The country's president has called for implementation, and that call has been echoed by the ratings agencies.
The urging of the ratings agencies is demonstrate delivery. And I think that's what we have to look for. We don't need more policy promises or better policies. We've got good policies in place. We now need that delivery.
Analysts suggest that it could take up to a decade for South Africa to dig itself out of its current hole that it finds itself in. Hopefully it'll happen sooner rather than later. I'm Angelo Coppola for CGTN in Johannesburg, South Africa.
Some positive news out of Nigeria. The country's recorded growth in its manufacturing sector for the first time in 7 months. And this, remember, is coming in as the country's economy is struggling to recover from the impact of the global pandemic, which has disrupted normal business activities across the world. CGTN's Phil Ihaza is in Abuja. He tells us more.
One of Nigeria's manufacturers springing back to life. Workers at the Mako foam industry raced to fulfill orders for new mattresses. Just months ago, production was completely shut down due to the COVID-19 pandemic.
You know, during that time, we sacked some workers because we can't keep them and paying. There is no income. So we sacked them. But last month, we called some of them back. So the work is going on. Customers are coming. We are selling.
Nigeria's central bank says some businesses in the manufacturing sector, like furniture making, textile, leather and footwear, are all picking up across the country. It says November was the highest month for manufacturing output since April. Experts say the lockdown actually created opportunities for local manufacturers.
Before the pandemic, they would depend on foreign imports of raw materials, that's for raw materials. That the pandemic distorted the value chain in the input supply from abroad. And that also led to a major decline in the sector. But right now, the manufacturing industry have looked inward to source this material locally. And that's led to what? To increase in production and increasing outputs.
The country's main earner is crude oil, a product that has not been trading well at the international market since the start of the pandemic. So the positive outlook witnessed in the manufacturing sector is good news for Nigeria's economy. The more the manufacturing sector continues to improve, the more Nigeria's economy can generate revenue from local sales and exports to other countries. However, analysts say a lot more needs to be done in order to sustain growth.
Government need to put more effort in other areas, especially creating an enabling environment, such as improving the power sector. Another major issue is for the government to improve the security situation in the country. This will aid not just manufacturing, but any other subsector in the economy.
President Muhammadu Buhari says his administration will do its best to revamp the economy by boosting locally manufactured products. Manufacturers like Amako Foam hope that will cushion the blow from the coronavirus pandemic. Phil Ihaza, CGTN, Abuja.
Now, there are growing concerns in Ghana that the import of second-hand clothing from the UK and the United States could contribute in one way or another to the spread of COVID-19. The government over there is enforcing a ban on the import of used undergarments, but other second-hand clothing is still flooding right into the market. CGTN's Nabil Ahmed Rufai filed this report from Accra.
This is Ghana's biggest and busiest second-hand clothing market, Kantamanto in Accra. With over 30,000 stands, shoppers can get everything from used men's underwear to designer clothes. The trade in hand-me-downs provides jobs for hundreds of people here. Janet Eduful and many traders say they have suffered huge losses due to the coronavirus pandemic.
COVID-19 has really affected our business. Our customers have been complaining that the virus could be in the clothes, so they don't buy. But we try to explain to them that when the goods are exported, they take up to 3 months to reach Ghana, by which time the clothes would have been free of the virus.
The World Health Organization says the coronavirus is unlikely to spread through clothes, but the Ghana Standards Authority, which is responsible for maintaining product and service standards, thinks otherwise.
When these goods come in, they are touched by the dealers. They spread them, even assuming they are fumigated, the COVID-19 is not there. They spread them, they deal with them, so somebody who has a disease and touches them can have it. And once you have it and people go to buy, they will also be contaminated. So it is possible that second-hand clothes can be a source of COVID-19.
This isn't the first time concerns have been raised about the potential health hazards of using second-hand clothing. In 2011, the government planned to enforce the ban on second-hand clothing arguing that it was unhygienic, but backed down after facing stiff opposition from traders. This time, the government stood its ground, and in March, it started enforcing a law banning the import of hand-me-downs for the first time since the legislation was passed 26 years ago. Braziers, panties, and handkerchiefs have all been blacklisted, but other products continued to flood the market after lockdown restrictions were eased in April.
Most of them come through the port, so we have officers stationed at the port 24 hours 7. They are always there and they inspect. When they inspect and they come across them, they seize them. Unless it is hidden in such a way that we can't find them. But once we find them, we seize them. Sometimes the trick is that they mix them with other products, other imported items.
About 15 million pieces of second-hand clothing arrive in Ghana every week, according to American NGO OR Foundation, most of it coming from the US and UK. For those who buy the used clothing, it's a case of what they can afford.
I buy second-hand clothes because they are cheap. They say the clothes are fumigated before they get to Ghana, so I hope I don't get infected with COVID-19 when I use the clothes.
The Ghana Standards Authority, however, says it's uncertain if the used clothing is free of the virus after being fumigated and shipped to the country. But banning the import of second-hand clothing in its entirety could lead to loss of jobs and push many traders into poverty. Nabil Ahmed Rufai, CGTN, Accra, Ghana.
You're watching Global Business Africa. Time for a short break. Here's what's on the other side. China's foreign minister arrives in Japan a week after signing a massive regional trade deal. And the US president-elect has picked Janet Yellen to be his finance minister. She will be the first woman to hold that post, if confirmed.
Taken me completely out of my depth, but at the same time it's exciting. It's new, it's different, it's a challenge.
It's really exciting.
Over the last 14 hours of rain.
Accra is my kind of city. That's because when I'm here, I feel like I'm back home in Lagos or Abidjan, which are two of the major cities I grew up in.
Business in Africa is high risk.
After about a decade covering business news on the continent, I've learned it's all about the high risk, but also the high returns and the high energy. You simply have to adjust in order to keep pace. When I started out as a journalist, my dream was to open people's minds to the different perspectives. From the CEO in the boardroom to the trader out in the street, we all have different stories. From Accra to Addis Ababa, from Cairo to Cape Town, and I wouldn't have it any other way. Here at CGTN, we realize that Africa is on the move, and it's moving fast, but we're moving right along with it. I'm Ucheo Koronkwo, and I'm a business anchor and reporter at CGTN.
I try to not let it affect me, but there are days when it does. I'm a human being, and to see patients in a hospital bed and their family members are not there, there's no one there to hold their hand, that human touch, you know?
situation that is not permanent and that everything will get better eventually.
Welcome back to the program. These are some of the stories making you headlines at this hour. Starting in Ethiopia, the situation in Tigray has caught the attention of the United Nations Commission for Refugees. The body is urging the warring factions to stop the conflict that could lead to even more severe civil war. The UNHCR chair, Michelle Bachelet, says that the build-up of tanks and artillery near Mekelle, that's Tigray's capital, is provocative and it could lead to serious violations of international humanitarian law. In the world of health, the medical charity Médecins Sans Frontières has welcomed the British company AstraZeneca's commitment to sell its COVID-19 vaccine candidate at a no-profit price, essentially about $3, in the course of the pandemic. AstraZeneca, however, it says, must prove that its claim that it has the lowest price of all the main candidates so far. MSF urged AstraZeneca to provide supporting documentation to make also its supply contracts public. AstraZeneca said it will not profit from the sales of the vaccine. The price, as I mentioned, has been set at around $3 per dose. And finally, Kenya's Directorate of Criminal Investigations has rolled out a probe into complaints filed by victims of the country's 2007-2008 post-election violence. Members of the public recorded statements claim they have received new threats as the country prepares for a campaign ahead of the elections that will be held in 2022. That's a run through your headlines. China's Foreign Minister Wang Yi is on a trip to Japan and South Korea. He arrived in Japan today. He's scheduled to meet with his Japanese counterpart Toshimitsu Motegi. He's expected to make a courtesy visit to the Japanese Prime Minister Yoshihide Suga later on Wednesday. Now, the visit does come after the two countries signed the Regional Comprehensive Economic Partnership, or the RCEP, trade agreement just last week. It's also the first visit by a high-ranking Chinese official since Suga took office. Discussions were expected to include pandemic control and ways of resuming travel between Japan and China. Elsewhere, the head of the International Monetary Fund says that China's economy is bucking the trend and it will end the year with positive growth. This comes as many other countries around the world continue to struggle with the effects of lengthy lockdowns and job losses and income losses, all attributable to the pandemic. CGTN's Dong Shui reports.
The Chinese economy is going to be one of the very few that would finish 2020 with positive economic growth. We project 1.9% growth for this year and 8.2% for next year.
That's Kristalina Georgieva, Managing Director of International Monetary Fund, speaking on China's economy recovery. The IMF also estimated that the global economy will shrink 4.4% in 2020, the worst annual plunge since the Great Depression of the 1930s. China, however, was expected to be the only major economy to record growth in 2020. So how has China's economy managed to recover from the pandemic? First, China successfully contains COVID-19. In early 2020, China introduced unprecedented measures to contain the virus, stopping movement in and out of Wuhan, a transportation hub home to 11 million people. Flights and trains were suspended and roads were blocked. Soon after, people in many Chinese cities were told to stay at home to avoid the spread of the virus, and those measures succeeded. The containment with the COVID-19 also helped the domestic economy rebound. A Ministry of Commerce survey shows China's retail and restaurant sales reaching 1.6 trillion yuan, or $235 billion over the Golden Week holiday, with daily sales up 4.9% compared to last year. Second, introduction of the dual circulation policy, a term first coined this May, refers to domestic consumption and innovation, known as internal circulation as China's main economic focus, while exports and global trade, or external circulation, will take a back seat, reflecting a major challenge in China's economic policy. It is a deliverable policy. Private consumption, for example, is less than 40% of GDP as compared to around 70% in Western economies, and it does have significant room for expansion. Also, Chinese households have huge savings, estimated at around 25% of disposable income and consumer debt. With the right incentive policies such as low tax rates or increased investment, the 1.4 billion consumers could open their wallets wider, accumulating in and sustaining economic growth. Third, openness to foreign investment. A survey conducted by the American Chamber of Commerce in China found that American businesses in China have remained profitable. In the midst of the pandemic, 90% of them are staying put or have increased investments in China. Only 4% of respondents were considering relocating manufacturing out of China, and one of the primary motives was the inability to find enough workers. Continued investment into China is likely to remain the norm.
On to the United States now. President-elect Joe Biden has chosen the former chair of the Federal Reserve, Janet Yellen, to serve as Treasury Secretary. Now, that position will play a pivotal role in helping to shape and direct economic policies at a relatively perilous time. If confirmed, Yellen would be the first woman to lead the Treasury Department, and that's in a line that stretches back all the way to Alexander Hamilton back in 1789. As Treasury Secretary, she faces a shaky U.S. economy, weakened by the pandemic, and now in the grip of a surge in infection rates. The move comes after the Trump administration agreed to begin the formal transition of power to the Biden administration. Onto the series, a return to the front lines of the pandemic. America's Midwest has experienced a surge in COVID-19 cases in the past few weeks, not least in the city of Chicago. The increase over there has led officials to once again impose restrictions in its attempts to slow down the spread of this virus. But that in turn has huge consequences for businesses. Here's CGTN's Dan Williams with this report.
Chicago's Christmas decorations may be in place, but the focus for the city and for the US state of Illinois is elsewhere. A rapid resurgence in COVID-19 positive infections has led Illinois Governor J.B. Pritzker to once again order tighter restrictions. Museums, casinos and theatres must close, while retail stores must adhere to new capacity limits.
Remember, the core philosophy here is that if we all stay home as much as possible, if we all avoid the trips outside the house that we don't need to take right now, we can fight this recent surge and turn things around for our healthcare workers and hospital systems.
Scott Friedland is the owner of Timeless Toys, a small specialty toy shop in the Chicago suburbs. Following the first lockdown, the shop strengthened its online store, offered curbside pickup, as well as free deliveries in the area. But the new restrictions promise a further strain on the business at a key time of the year.
We're here to find what the right toy is for your child and not necessarily what the most popular thing is. So we want to talk to you about your kid, get to know them, and find the perfect toy for them. That gets lost a little bit in online sales. You don't necessarily have that experience.
How y'all doing today?
Signs of the economic impact of COVID-19 in the Chicago area are easy to see. For months, long lines have formed at food pantries.
The pressure on small businesses in Chicago and much of the rest of the US looks set to continue for the next few months as more restrictive lockdown measures are imposed. But the grim reality remains. Hospitals and medical facilities are simply struggling to cope with a huge surge of COVID-19 cases.
Illinois has again expanded its testing capacity. The state is reporting record positive cases and hospitalizations. The death count is also rising quickly.
The really concerning thing is that we're in this second surge and we've not yet shown signs that this surge is slowing down. And now, as we know comes along after that, we've seen rises in hospitalizations and ICUs and even deaths, all of which are up 3 times what they were.
There is now a real fear that hospitals could get overrun. And that includes the new Roseland Hospital on the far south side of Chicago.
We're not going to have the staff, we're not going to have the doctors, and we're not going to have the beds unless we do something to dampen this. We're seeing staff members in beds next to patients right now. Our doctors are going to be dying next to our patients if people don't slow this spread.
News of successful trials for COVID-19 vaccines offer hope, but their widespread distribution is still some time away. In the meantime, for officials here, difficult decisions lie ahead.
Now, we did speak about manufacturing in Nigeria. Let's get back to that for a moment. The country now is locally assembling electric cars. In this case, the latest entrant is Hyundai's Kona. The vehicle was recently unveiled in Lagos, the country's commercial capital. That puts Nigeria in the league of countries that are assembling electric cars within their own borders. Here's CGTN's Deji Badmus with that story.
Nigeria's first locally assembled full electric car. The Hyundai Kona may not be a new name in the global automobile industry, but this one is a big deal for Nigeria, and many here are calling it a vehicle manufacturing history for Africa's largest economy.
With an innovation of a Hyundai Kona, we do not need to put the pressure on what is the pump price of oil again, what is the pump price of petrol again, and all the issues and fights that we're having about prices of petroleum going up and rest of it will be things of the past. And they've said it that it's going to come even at a price that is cheaper than your normal fuel-consuming vehicle.
The car was assembled in this factory using local technicians, and there are more still coming off the line.
The Kona EV is uncompromising newcomer that combines bold, roomy with impressive drive range. Kona has a range of 482 kilometers for one full charge battery. It takes 9 hours, 35 minutes to charge the Kona battery from 0 to 100%. The Kona battery capacity is 64 kilowatt hours. The warranty is for 5 years on the battery and the vehicle itself.
At a cost of 24 million naira, which is around 63,000 US dollars, based on the official exchange rate, the compact SUV doesn't seem cheap. But the makers say when compared to a fuel-powered car of the same range, the cost of operation is about 50% less, and that most importantly, it reduces the global carbon footprints. The city's authorities are already making plans to ensure the car gets a good reception.
We're going to be creating different charging points in the city so that people will not give the excuse and say that because I don't have electricity. We're going to be partnering with some fuel stations. We're going to partner with strategic locations of some eateries where we'll have dedicated charging points so that by the time we're rolling out this car in large numbers, people have opportunities of where they need to charge.
The launch of the car comes at a time when the government and labor unions in the country are locked in a battle over the increase in petrol price. It's a never-ending battle that has raged for decades, but the electric car might just be the final solution. And as more people here go electric, the debate of petrol price will die a natural death. Deji Badmus, CGTN, Lagos, Nigeria.
All right then, electric cars are one thing, but let's get back to the things that actually power most of the cars on the road right now. If there ever was an argument to be made about markets pricing in a lot of vacuum optimism, oil prices would probably be the clear demonstrator of that. Brent futures up about 3.4% higher at 15:45 GMT. They hit $47.80 a few moments ago. November's seen strong gains in Brent, prices going up by at least 25.5%. WTI also going up to $45 a barrel. Last time we were there, it was early March. Gold prices, on the other hand, down by 8.7% since they peaked at about $2,063 an ounce in August. Spot gold was about 1.7% lower at $1,805 an ounce. Here's what's coming up next. Well, explore why demand for short-term rentals has risen to its highest level on record in South Africa when we come back.
You don't find the stories of North Africa by sitting on the sidelines. No one else will take you where we can in North Africa. And no one else will show you what it's all about. CGTN, see the difference.
welcome back to the program. Let's head over to South Africa. The commercial property vacancies in that country right now are at the highest for the first time in 16 years. It's caused obviously by a combination of pandemic restrictions and persistently low economic growth. But there is a bit of a silver lining to all of this. Demand for short-term rentals, or hot desks in industry parlance, is gaining momentum relatively quickly. A local company is offering a service that perhaps would be best described as analogous to Tinder. In the same way that Tinder finds the perfect match, Office Hub finds flexible workspace. Here's CGTN's Julie Shire with that report.
The demand for hot desks has spiked during South Africa's coronavirus lockdown, a trend Sensimbenza director Andrew Robinson saw coming well before the global pandemic.
There's a hybrid model that is now happening that the young or old are actually adopting, and that is to work from home on certain tasks, but to come into an office environment where that energy is created. And the future of work is going to really be leaning towards that.
Sensimbenza partnered with Australia's Office Hub to bring the Tinder-like service to South Africa, and it's been a hit so far.
The key is matching the right tenant with the right space. The questions that we ask and the technology that's built into the platform gives that match immediately. So it's really assisting both sides, the tenant, the property owner.
South Africa's commercial property owners, however, have been left reeling. The country had a thriving office culture before the lockdown, but many buildings are still standing empty.
The vacancy rate is sitting at an all-time high of 12.7%. But we must bear in mind that this was on the back of already an economy that was slowing down. So we already started noticing some of these figures in both the office and retail sectors last year on the back of a low GDP growth and an economy that was already in trouble and waiting for junk status.
Landlords are hoping for a turnaround in the market, but it may be a while with a weak economy and escalating unemployment.
I think you're going to see an increase in retrenchments, and subsequently what comes with that naturally would be a smaller team. And so it's a strong possibility, less office space. And so the property owners would have to try and figure out what to do with this excess space. Some of the ideas are converting to residential, maybe converting to hotels, combining your retail space with office space.
Without a COVID-19 vaccine, a lot of uncertainty prevails in this market. South Africa is already winding down for the festive season, and landlords may have to go back to the drawing board to recoup the losses in the new year. Julie Shara, CGTN, Johannesburg, South Africa.
And finally, a run through the currencies for you. Nigeria's Monetary Policy Committee meeting wrapped up some 3-4 hours ago. They essentially left the policy rate unchanged, as it were. The cash reserve requirement, the liquidity ratio, also left as is, 27.5% and 30% respectively. Now, the MPC, remember, has cut the policy rate this year twice, and each cut was by about 100 or so basis points. Keeping rates where they are, according to the governor, will allow current policy measures to permeate through the economy, in the words of the CBN Governor Godwin Emefiele. But given OPEC Plus output curbs, some economists are making the argument that the earliest Nigeria can really exit its current recession might be the second quarter of 2021. We'll have to see how that does play out. So, on the day that the Dow Jones hit 30,000 points, that's it for this edition of Global Business Africa. As always, we'd like to hear your thoughts on the content you see on the program in the last hour. Many ways to get your thoughts back to us, all of them on your screens right now. I'm Ramah Nyang in the Kenyan capital, Nairobi. Thank you for your company in the last hour. The World Today is up next from Washington, D.C.